right, mic check, mic check. What's going on, folks? Uh-oh, can you see me? What's going on here? I can't see the screen. There we go. Now I got the screen up. All right, what's up, folks? Welcome to today's International Heavy Hitters Report. My name is Hamilton, here with the Trending Initiative. 10-minute spiel about why we like international exposure here. It was all over Twitter or X, this weekend. Why a majority of technicians are looking at international exposure. We're going to go through that really quickly, and then we're going to go through the actual list that we have here. First things first, how we calculate this list is we look for strength. Always in a market that is going to the upside, which right now international stocks are, we want to find the names that are leading to the upside. So we throw our technical filters on top of it, some volume filters, make sure there's options available, and then we filter it by proximity to 52-week highs. We're looking for the leaders of this group. If you were with us 2 weeks ago, we also went through the International Heavy Hitters Report. You're going to see a lot of the same names on this list. Why? It's because strength begets strength. If you own the leaders early, they tend to lead for a long period of time, and that's what we want to do here inside of TTI. So the first thing I want to point out here is that international stocks are outperforming U.S. domestic stocks. It's been that way for the last couple of weeks, but it's becoming very apparent now. Lots of really good charts have been posted on Twitter, or X over the last couple of days, kind of proving that thesis. One thing I want to point out, though, is the moves that you see on these charts are not necessarily driven by retail buying. It's not retail traders going out and buying things like ING Group, a bank out of Amsterdam. They're not owning things like Medtronic, which is a medical devices company out of Ireland. This is institutional buying. It's not necessarily retail buying. So by the time retail kind of catches wind of this trade, I would assume that the easy entries are probably behind us. So it's imperative for you guys to find this stuff early enough in the cycle, be able to grab a hold of these, preferably if you're trading options, close half at 100% to turn your trade risk free, and then continue to ride the trend to the upside. The other thing I want to point out here before we get into the list is the simple fact that over the last 15 years, U.S. domestic markets have outperformed international markets over the long term. There have been pockets of weeks and months where international stocks do better than U.S. domestic stocks, but for the long term, the primary trend in relative strength has been in favor of U.S. domestic against international stocks. Does that change here? We've had this conversation before. I believe the last time we really had this from a true international standpoint was back in 2018, but we also had some overperformance in Chinese internet and tech companies back in 2020 and 2021. The big question here is this the turn? Is this where international stocks really start to outperform U.S. domestic? And I'm not talking for a couple weeks or months, but I'm talking years. Is this it? It could be. It absolutely could be. I have no idea. As a technical trader, I don't know what's going to happen next. I can only follow what the market is telling me. And as of right now, trends are breaking out, some of them in secular bull markets, meaning these should last for a long time, and we want to catch them as early as we can. Okay, so that's kind of my thesis here for international stocks. We're going to go through 4 of these in particular. We have a bunch of these positions already inside of TTI. So as we go through these, if these types of trades make sense to you and you're not a part of TTI, feel free to click the link in the description and learn about how we operate within the market. Our focus is always on owning strength, particularly in bull markets, which right now international stocks are breaking out into those new secular bull markets. So first things first, we talked about Medtronic the last time we talked through International Heavy Hitters Report. We went ahead and put a trade on here. Very simple, stage 1 into a stage 2. Love this setup. This is Stan Weinstein 101. You get this nice prolonged stage 1 base of accumulation, and you get the final breakout here. You're trading north of an upward sloping 200-day moving average. You have the beginnings of a potential bullish momentum regime. We like when the breakouts are accompanied by overbought territory, and then the RSI ranges above the 50 and below the 100. It really goes to show us that bullish momentum is there on this breakout. We do not have a whole lot of volume up here as indicated by the VRVP to impede a potential breakout. We really, really like this particular setup. Not only is it a stage 1 into a stage 2, which is historically a great place to begin a position, but it's also in the leading sector, right? This is the leading sector year to date, healthcare. That's not to say that the U.S. domestic market has done very well this year, but Medtronic is a part of that sphere of the market, right? Sector, medical Specialties. I believe there's a medical devices company. I don't know what the hell this thing. It might be a money laundering company for all I know. All I know is it's an Irish company catching a bid, stage 1 into stage 2, and there's some healthcare exposure there. Really a nice setup, and there's plenty of options availability as well. Reason why I like this particular setup was the options chain was relatively cheap for what we were getting, and the implied volatility was low. So it gave us an opportunity to just position ourselves in straight calls here. The risk versus reward on this particular trade very, very, very high because of the low implied volatility and the very little amount of resistance over the 93 area. So I'm excited for that Medtronic trade. It makes sense to us. Targets in between 105 and 110, and then to a later extent, if you will, 130 to 135. Next trade I want to go through down the list, and once again, you can go ahead and look through this list. Look at the type of industries that are represented on here. You're not going to find a lot of tech. There's not a lot of tech overseas, unless you're China. Europe has very little tech, right? It's majority financial related names. Latin America has very little tech. It's majority materials and commodities related names and some financials, right? You're not going to get a lot of that tech exposure here. As a matter of fact, that's probably a good thing because tech, at least in the U.S. domestic market this year, has been absolutely crushed, right? They are the leading sector group in this downtrend that we're currently trading through right now. This correction is led to the downside by tech sector. So as we continue to go down this list, just take note of all of the different types of industry groups that you see on here. And one trade that I want to go through right now that we haven't put on yet, but we want to, is ING. Now, the reason why I like these types of trades is when's the last time you had a conversation with your neighbor, your brother, your cousin, your boy on Twitter or X or whatever, and they said, listen, man, the market looks really good. I want to own ING Group out of Amsterdam. It's a bank. Probably never. And that's why I want to own this stuff, because retail is not talking about it. Will they ever talk about it? I don't know. It's a good question. It's a $63.47 billion major bank out of Amsterdam. This is a decade of a stage 1, right? Going all the way back to 2009. We're finally breaking out. We have obviously 52-week highs, but we have 10-plus year highs here, right? There's almost a 20-year high breakout in ING. I really like this above 1975, targeting $30, and then to way further out there, upwards of $50. We have a bullish momentum regime that's come in. Really like this setup, trading north of an upward sloping 200-day moving average. And once again, look at that VRVP. It's a beautiful setup. And there's options availability on something like this. This setup reminds me of UBS. I opened UBS up back in 2023. Damn near looks the exact same above $23. I held through all of the crap on X about how UBS was insolvent and banks were going to zero, and this has been a fantastic trade. The call options, which arguably I should have bought way more time on, good trade, 500-600% winner, still holding a shared portion of UBS. Go back to ING. It's the exact same setup, right? It's the exact same thing. Stage 1 into a stage 2. Why would you not want to own this, particularly if there's options availability, right? You can juice these this play up with straight calls, load, implied volatility, environment, etc. No overhead supply. This is a trade we're putting on later today inside of TTI. So if you want to take that trade with us, feel free to hop on over and join us. Let's go ahead and keep going through. We opened up a new trade in BBVA last week. I like this particular setup as well. Looks damn near the same because guess what? Technical trading is a lot like that. Find a setup that works and take it every single time as long as the supporting evidence continues to suggest that the path of least resistance is higher, and it does. Banco Bilbao says Argentina, but I believe this is out of Spain actually. We like this above $13, price target of $20, and then to a greater extent $30. Once again, bullish momentum regime trading north of an upward sloping 200-day moving average. Very little volume on the way up to impede this potential breakout. Exact same setup as ING. And it's not on accident. If you think that these stage 1 into stage 2 breakouts are an accident, go and look at how many international financial stocks have this exact same setup. I can name 5 off the top of my head. They're not all on this list, but I can name 5 off the top of my head. HSBC is one of them. BBVA is another one. ING is another one, right? Go through and look at all of these technical setups that look relatively the same and ask yourself, why do they all look the same? And is this something potentially bigger than what maybe most people expect here? Are there broader based implications here? BBVA, nice breakout here. Once again, we like it above $13. And then the last one I want to go through is AEM. So this is a little different. It's not a bank, it's a gold miner. Gold miners have had a tough trade. They've had a really tough trade. They have not performed as well as other areas of the market, even if the primary trend remains up. And that's unfortunately just part of trading gold miners right now. Gold is on a tear. We've had a position in gold since March of 2024. We've added in a couple different times. We expect gold to hit $3,000 an ounce. And for whatever reason, gold miners have not kept the same performance that gold is showing. So there's this kind of catch-up trade that's looming over everybody's mind. Are gold miners finally going to catch up to gold? I don't have the right answer. I have no idea what's going to happen. What I do know, though, is if they do, there are a couple of names that very clearly are showing leadership characteristics. And one of those is AEM here. Up into all-time highs. Once again, multi-decade breakout. It's easy to trade these types of breakouts. That's not to say they're going to work. All of them at least, but we know exactly where we're right and where we're wrong in situations like this. Range high breakouts after 10 plus years of ranging. We are bullish above $89 and we can be bearish below it. It's just a line in the sand. That's where we define our risk. We have a price target up near 130, 131. I don't think it has to be any harder than that. We're trading north of an upward sloping 200-day moving average, obviously into all-time highs, so we don't have to worry about overhead supply coming in and kicking this breakout back down. And we're trading within a bullish momentum regime. So there's 4 trades right there off the International Heavy Hitters Report that are bucking the trend of U.S. domestic stocks. Stocks, or at least within the United States over the last 4 to 8 weeks, have absolutely got killed. Last week, financials finally got hit. That was kind of the last bastion of the offensive area of the market that we were looking at inside of TTI saying, hey, is the market really going to correct further? It's hard to imagine that happening with financials looking as good as they are. And then last week, they came and kicked financials down, I think 6-7% in a single week. One of the worst weeks in a long time in financials. But here we have international stocks. And so the theory is that potentially a lot of these American companies are acting like ATMs, that institutions are rotating out of the U.S. domestic markets and into international exposure. You know, you could argue macro policy all you want, but all I care about as a technical trader is identifying this relationship early and taking advantage of it when and if I can. 4 different trades for you to look at. Once again, MDT, Medtronic. We like ING Group out of Amsterdam, BBVA, Banco Bilbao out of Spain, and AEM, Agnico Eagle Mines, gold miner name, right? I think it's out of Canada, if I'm not mistaken. That's what I got for you today with the International Heavy Hitters Report. My 2 cents is that this is probably a trend that is breaking out that will exist a lot longer than most people expect. I don't think that needs to lead to weakness in the U.S. domestic market, but with the rate of change, which was going around on X this weekend, of funds out of U.S. domestic markets and into international things like Europe, has hit an all-time high on the week. Generally, those momentum thrusts lead to prolonged trend changes. So it'll be interesting to see how that shapes up. Okay, that's what I got for you guys. If you have any questions, feel free to leave them as a comment below the video, and I'll get back to you when I can, probably after lunch. I'm going to hop off here and go enjoy lunch. Enjoy the rest of your day. And for those of you inside of TTI, we have our masterclass tonight going through momentum and relative strength. I'll see you